Hello again, guys. Right, I just want to this video is probably one of the most important eureka moments I've had for quite a while, and by that I mean I'd forgotten quite how I dig these trades out of these charts. And this morning was a real tough bit of analysis I had to do to actually identify which way I want to be trading. I couldn't see it clearly, maybe I hadn't had enough coffee, but you know, we're looking at an H4 chart, and I generally start on the daily in H4 to get a kind of feel for what's going on. The H4 was telling me we're definitely in this long downtrend here. Remember, we hadn't printed this candle here. This is the 6 a.m. to 10 a.m. bar, and so we were here. Clearly, two H4 green candles would suggest an up move, but that was the only information I could get, really. I mean, I could draw, you know, support and resistance lines on these charts. You know, we were testing with the green candle, we were testing the high of that red candle there, so I do always draw them on as well, as you're probably aware from previous videos. So we were testing this recent support, but that didn't really mean a lot because it hadn't created a lower low, so it's not resistance. It's not actually what I would call a valid resistance level. This is more valid, so a little bit higher. So that didn't tell me anything much at all. So, and then I realised, and I don't think I've mentioned this enough, that I really rely on these indicators, or this indicator, to tell me what's going on. And on an H4 it's above zero, so it tells me I've got to go long, and the MACD was agreeing. And the reason I've got these both on here is now because I want to tell you categorically the MACD is as good, if not better, than mine. In fact, I'm convinced now, having really been forced to study it on your behalf, it is better than mine. So we're going to, I don't think I'll ever be able to close mine off the charts and rely on the MACD on its own, because it's belt and braces, but and having had it for 15 years, it is a difficult one to lose. But the MACD is faster acting and clearer, so hopefully it'll help you enormously as well. So anyway, getting back to the eureka moment, what I had forgotten to emphasize is how important this mantra is in my decisions about what to trade and how to trade, directions I mean, up or down. And the mantra is, if it's green in this instance and above zero, I can't consider shorts. But obviously on the lower time frames, and especially, and this is important too, as it could be exhausted. You could call it, you know, it's not just crossed over. If it's just crossed over, I do not want to be trading, and that again will be clearer when we start to look at our trading time, which is the Frankfurt and London Open, and the importance of that. The importance of the recent crossover. So I'll go to the next sort of time frame, just show you what analysis I did then. So this point here, remember, this is 6 a.m. the pink vertical line, and I'm looking at this. There's power to the long side, and but at 6 a.m. or 6 just by 7 a.m. this is a 6 a.m. open to the 6 a.m. close, the bottom of the bar, or 7 a.m. close, and we'd broken the lows and closed below 2 bars, so there was definitely potential for reversal on the cards here. And this is where now the indicators start to take over, because what can I not do? I cannot consider trading long if this is red and below zero. And this rule is important on all all of these moves. It's not just this one this morning. You will see that a crossover, a change of colour, is massively important on all of these. Change colour there from maroon to red, boom, goes down. Change colour there from red to green, boom, it goes up. But we're not too worried about the hourly chart, and we're not too worried about the out of hours. But do your own analysis and you realise this. And I'd forgotten that this was part of my thought processes, and it is massively important. And the other thing, while we're on this chart and talking about the importance of this, is this. I have taught myself how to trade after about 4 or 5 years with nothing on my charts except candlesticks, and I had such a good understanding for myself of candlestick analysis that I'd found something that was pretty unique, and I was happy with it. And it all really started with the 2B reversals and then went on from there. And it was sort of the fact that a pattern, a 2B reversal pattern, will form like this has on this H1, but it will be a part of another bigger pattern, and I used to call it nested. Anyway, I moved away from the 2B, and I digress a little bit here too, but the candlestick, my intense knowledge, if you like, self-taught of the candlesticks, allowed me to ascertain the importance of particular indicators, as long as they don't repaint, and I could play one off against the other. This is why I like this one so much, because it coincided with my knowledge of candlesticks, and because of that I knew this was 100% reliable, and as such I know this is 100% or for me reliable enough to allow me to use it instead of the candlestick analysis. So 100% reliable is the wrong thing to say, but reliable enough. So I've put it back on my charts now to aid the ability to instruct or help, should I say, you to see the charts in the same way I see them. So anyway, getting back to this, so we go to M15. By the way, 3 trades, 3 winners during the Frankfurt and London Open again today. The box breakout, that's the London box, the pink one. It was a textbook, but I won't go into that because we've done that too often. Here's you can see this now clearly, this 2B within a 2B. This is a 2B formation there, and this is a 2B formation there. So this 2B, what I'm trying to say is the target is the high, and the target here is the high for this one, and you can see this one's exceeded this target, and it's gone on to potentially go for that target too. So that's the 2B thing, what I call nested or Russian dolls trading. So you're using the same patterns and the same indicator analysis as you would, and you're taking your target from the bigger one. That's what I'm saying. So anyway, back to the indicators and the power of this thing. What can I not do when I'm considering trading long or short here? I cannot trade against my indicator. So you can take your direction from the 15-minute. Remember, you will get failures outside of the busy periods. Let's say, I don't know, I haven't done the stats, but let's say you get 60% winners outside of the volatile period, but inside the volatile period maybe 80, 85, 90% will be correct, will do what it says on the tin, as it were. The only thing to be concerned about is news inside of our hours. There was news today, and that was very important. It was in the back of my mind all day, and that's what caused that massive great candle at 9:30 there. But all we're worried about is till 9 o'clock. I want to be out of my trades if possible by 9. Anything else is a bonus. So getting back to the indicator, 15-minute chart, what happens when that pink vertical line there, next candle closes red below 0. That's that, oddly enough, that's that green one there, and then price absolutely collapses. So we wouldn't have, in this box here, if we were trading that green box breakout there, we wouldn't have even considered long. And bearing in mind also, this is telling us we shouldn't be going short because the MAs are in the wrong direction. And I've said before, the MAs, I could lose them without even batting an eyelid. The indicators, and I'd forgotten, this is the added source, if you like, are where I look to when I'm unsure. Higher time frames always take precedence, so where that helps you is that even if the 5 minute and 1 minute are saying something else, you can still hold the trade because the 15 minute is telling you you should be short. And look what happens. It goes from maroon, which is sideways, clearly see that sideways inside that big red bar there, to red, which happened just before the pink vertical there, and look what happened, price collapsed. Previous one, same thing, 6 AM to 7 AM, bit of sideways going inside that big engulfing bar there, and on the hour at 7 AM it turns red, and look what happens, price collapses. And it does this time and time again, guys. So this indicator doesn't repaint, so that's what you see is what happened and what you get, as it were, on the tin. Same here. We could only consider longs at this point, if we were even considering trading outside of the safe time. Look what happens there. It changes from, it's above zero, so we've got to be looking for longs no matter what the other charts tell us. Just happens it's above the MAs as well, which of course it would be. Turns from dark green to light green. We've got to wait for the bar to close. Price jumps nicely, and then, oh, what's going to happen here, guys? I don't know. Right, just wait. You couldn't have considered long until this had turned pale green. It didn't. I won't go into the PA here, but you could look at the PA and ascertain that the power is running out to the long side. Red zero. Look what happens the moment that's closed, that bar, boom, price absolutely collapses. And it just goes on, guys. Another one. We can't go long against our indicator. Price changes from maroon to red on that orange dotted vertical line there. Little bit of drawdown, I think it's about 7 pips from memory, and then price collapses again. So if you aren't sure about the direction, use the higher time frames. 15 appears to be working very well here. I'd forgotten I do this, guys, and it was a tricky morning this morning that reminded me that this is part of the analysis. And always take your lead from the higher time frames. Then you can be sure, even if you've entered a trade and you get this pullback and you think, oh my god, you're looking at the 5 minute chart here, wondering what the hell you should be doing. You can never trade against the higher time frames. Well, you can, but that's a different story. You should never trade against the higher time frames. This is a good example here. If you'd considered going long there, you would only have had to look at the 15 minute to show you were completely wrong. And I'll go back to the 15 minute. We'll put the there. So that's the close of that candle, bar, whatever you want to call it. Oh my god, it's going long. Look at your 15 minute. Sorry for blaspheming there. Oh my goodness, we couldn't possibly consider going long there. We're below zero, and maroon just sideways. It would have to go above zero and green before we can consider long. And then the PA price action was telling us we're in a trend here. You can go back to the 5 minute and clearly see that trend. High, low, lower, high, lower, low, pull back, continuation to the downside. So guys, look closely at these. This is my favourite move when it stays below zero, changes colour, and the price comes down. Stays below zero and changes colour, maroon to red, and another super cool entry there. Combined with the breakout of the box there, This is powerful, guys. So do your own analysis, study a load of those, and remember, it is more likely to be statistically better signals during the volatile periods than you will always prove losses and so on and so forth, failures outside of your normal trading time. But then you just drop down and it becomes more high probability again, because you're trading smaller distances. So the higher time frame, you can use a 5-minute time frame to validate your M1s, but I suggest you stay away from outside of hours trading, as it were. Just stick to that Frankfurt London Open and do your research yourself, guys. I hope this inspires you, I hope it helps you, and thank you for watching. Oh, and also remember, this now has taken over precedence over my own indicator, so you're not missing out on anything. It's all free, it's all quality tested, if you like. So thank you for watching, have a great day.